And I don't think this is hyperbolic. I think that Bitcoin is the single most disruptive technology in the world right now. The ideal long duration, safe haven store of value. It's the ultimate sovereign digital property ever invented in the history of the world. The conventional treasury strategies, which rely upon short-term government bonds, all have negative real yields, like programmable, the normal gold. That struck me as being a really cool thing. It's a monetary fire. There's a monetary fire burning in cyberspace. How do you feed a fire, a monetary fire? You feed it money. You feed it money. If you do the work, you'll say this is monetary electricity, and the first time in 5,000 years the human race figured out how to put encrypted money on a digital network and move it around at the speed of light and store it for 100 years with no power loss. And if you want an indicia of that, it got to $1 trillion in 12 years. Facebook still didn't get to $1 trillion. And it took Google 22 years, and it took Apple 42 years. Nothing in the history of technology ever got to $1 trillion in 12 years without a marketing budget. The theme is humans prosper by channeling energy. What's the most efficient energy network in the history of the world? Well, it's about to be Bitcoin. When you encrypt monetary energy on the Bitcoin network, it's like achieving escape velocity out of the gravity well. Throw a baseball on a baseball field that goes a couple of hundred feet. Get out of the gravity well, throw the baseball, it'll go around the earth forever. Okay, so how much more distance do you get out of the baseball if you pay the price of getting out of the gravity well? It's not like 10 times better. It's not 100 times better. It's not 1,000,000 times better. It goes to infinity and it never stops. And that's the breakthrough that people don't get. It's like, what could I do if I had vacuum and I was rid of friction? And yeah, there's a price to pay. And that's your phase change and your state change. And that's why would say Bitcoin is the most efficient system for channeling energy through time and space in the history of mankind. We've never figured out how to channel energy with no impedance and channel energy with no loss. So I think March was a big year. What happened in general was the money supply everywhere in the world started expanding at double to triple the normal rate, and that causes the currency to weaken in purchasing power against scarce assets. That is, assets that everybody wants to buy. So the reason that the stock market went up is not because you're a genius and you pick good stocks. It's because the same number of stocks exist today as a year ago, but there are 25% more dollars. In an environment where the money supply is expanding, if you don't have a large asset portfolio, then you can't keep up with, you can't maintain purchasing power to buy the things you want in the future. You know, first of all, Bitcoin is the solution to the problem because it is the apex property. You can't inflate it away. It's a global monetary network for people that want to store their economic energy for the next 100 years. So it's the solution to the problem. That's why it's exploding in value and popularity. Politicians and conservative large bureaucracies will be the last to embrace this, but it ripples, right? From the visionary entrepreneurs to the early adopters to the macroeconomic investors to other investors to, you know, first the techno media, then the mainstream media, then sparks fly, a little bit of smoke, a little bit of controversy. Now you got to have an opinion. And it's going to be injected into consciousness. I think this is part of the healing process of a free market. Price discovery has disappeared. The yields have all gone negative. And that means that no rational person is going to buy a bond. Like, why would you buy a bond that yields 2% interest if the money supply is inflating at 15% a year and if the purchasing power of everything is falling by 15%? Price discovery has disappeared in the bond market. What that means is you have $100 trillion of bonds and bond-type instruments, and they're overvalued because the Federal Reserve is printing money to prop them up and buying the bonds. At least GameStop, I might make money, but if I hold cash, I certainly will lose money. Digital gold in cyberspace where no one can make any more of the gold. I got 21 million virtual gold coins in cyberspace. They're on a global network. Nobody can make any more. And there's no CEO, no company, and no country to screw it up. And nobody can take this away from me. I can take personal custody of my digital gold, and that's what we call Bitcoin. God invented a perfect place to store all of your life savings. He, she would invent Bitcoin. what's going on here is you either put your money in the stock market and guess on high tech, high growth, and that's a challenge, but you can do it. That's the popular solution. Or the other solution is I put my money in a bank in cyberspace, the bank of Bitcoin. It's run by incorruptible software, and it offers me a global, affordable, safe, secure savings account for a person that neither has the means or the inclination to run their own hedge fund. And that, in essence, is what Bitcoin is. That's why people are stampeding into Bitcoin at the rate of millions a month. Well, maybe it'll be hacked. We wait 12 years, it hasn't been hacked ever. Maybe it'll be banned. Well, actually, it's property by the IRS and the SEC in the United States. It's not banned. And with all these institutions buy it, it's not banned, it's property, it'll be here for the long term. Well, maybe it'll be copied. Well, it's been copied 10,000 times. Nobody was successful, right? Bitcoin is 100 times bigger than Bitcoin Cash, 200 times bigger than Bitcoin SV. And so the dominant digital network with $1 trillion of money in it, that's probably the bank in cyberspace that we're all going to use. Well, 10 years ago, you didn't have Bitcoin, and the best idea you had was gold. Jake, it's not very practical for you to buy $347 worth of gold. The markup is extreme. It's going to take a long time. And eventually, if somebody knew you had it, right, it gets shipped to your house, or you buy it, they put a gun to your head, they take your gold. And how are you going to pay for anything with a block of gold? Digital gold is a different thing, though. We're moving toward a world where 1 billion people, in the next 5 years, 1 billion people will have Bitcoin. I think by the end of this year, 200 million people will have Bitcoin. We're adding them at 5, 6, 7, 8, 10 million a month. That's how fast it's going. And so we're going to get to a world where billions and billions of people have a wallet, and they have money in it backed by Bitcoin. It doesn't matter whether the Lebanese currency collapses, the Turkish currency collapses, or the Venezuelan currency. It doesn't matter whether the euro weakens by 15% or the dollar weakens by 50%, because as people put their savings account into the bank of Bitcoin, into that bank in cyberspace, they protect themselves from the currency weakening and the currency collapse. And they have sovereignty. It gives you economic sovereignty. It's a way for you to store your own monetary energy, your life force. And you can store it for a decade, for 100 years, for 1,000 years. You can pass it to your kids and your kids' kids. I don't think we have to go the way of a Zimbabwe or a Venezuela or a Weimar Republic. I think that, the Bitcoiners say Bitcoin fixes this. The solution is everybody uses Bitcoin as their savings account. And as capital flows out of those fiat derivative instruments that are losing monetary energy every year, and it flows into Bitcoin, it's like you've got Kevlar armor, Well, if a government knows that you have the option to do that, then their technique doesn't work so well. It works less well. And then eventually there's a check and a balance. And you know, and if I can pretty much print money with impunity and I can force you, you know, down deeper and deeper into your hole, you know, I have infinite power, absolute power. Absolute power corrupts absolutely, right? As Lord Acton said. If the citizens can just opt out of the system, then I actually have to sit down and say to myself, maybe I need to either, here's what's going to happen in Nigeria. They're going to say, we either need to fix the currency and stop printing infinite amount, and we have to uncorrupt ourselves. We can't just give away all the money to our cronies, and we can't spend money that we don't have. Try to ban it. You can say, well, we don't want our citizens to have it. But, you know, how are you going to take away a product which I can hold on a mobile phone and I can access via VPN? I mean, look at VPN. People in theory can't access Google and Facebook and Twitter in China, but they access them. Bitcoin ultimately is it's a stabilizing force for good. It's a stabilizing force for good. The currency, if it's losing 20% of its economic energy a year, it becomes toxic. It's like having toxic blood running through your body. Or another way, Jake, to say it is, I'm sucking 20% of the oxygen out of your bloodstream every year. And eventually going to suffocate you unless you have an oxygen bottle. And Bitcoin is like oxygen. It's an antidote to a toxic currency. Inflation doesn't equal CPI. Inflation is the rate at which the things you want to buy go up in value. So if you want a house, the inflation rate was 11%, not 1. And if you want to buy stocks in the S&P, the inflation rate was 20% or 25% or more. So the pernicious lie is that inflation is CPI. It's not true. They want to be able to have children, have a horse, live in the country, write their book, paint, right? Study. They want to be able to do what they want to do without having to work their fingers to the bone 90 hours a week. So if the bond cost $1 million and pays 5% interest, it costs you $1 million of life savings. But when the politicians lower the interest rate to 2.5%, you have to come up with $2 million. And when they drive the interest rates down to 1%, you have to come up with $5 million. And when they drive the interest rates to 50 basis points, you have to come up with, $10 million, right? And so there's hyperinflation in Social Security. And so when the banker says, we're just going to keep interest rates low in order to give you a job, Well, you could also say, we're going to keep making assets more expensive, so you have to work forever. The road to serfdom consists of working exponentially harder for a currency growing exponentially weaker. I'm in a rowboat and I'm rowing, that's manual labor, and the wind is blowing 5 knots in my face and I can barely keep up with it. And then when the wind blows 20 knots in my face, like when the money supply is expanding at 20%, the wind's blowing 20 knots. I can't row forward anymore. I'm going to never get to my destination. I'm going to starve to death. Assets go up 10% doing nothing, right? And so the pernicious thing that happened in March is if you're on Wall Street and you have $1 billion in assets, you made 25% more doing nothing. You had the best year of your life. And if you're on Main Street and you generated $1 billion in cash flow, you have to work 25% harder in order to do nothing, in order to get nothing. Like, if you work 25% harder, you got nowhere. If you're on Main Street, and if you're on Wall Street, if you went nowhere and did nothing, you got 25% more. If you're an individual and you want a life strategy, a financial strategy, you need assets. And the only question is what's in your asset portfolio. And my view is that the apex asset, the best property in the world is Bitcoin. Real estate's not so good. Bonds, of course, are awful because bonds are just long-dated cash. You're locked into a currency and you got a negative 10% bill yield forever. And so what are you left with? Scarce art? Diamonds? Diamonds and gold are commodities. You can create more of them. Scarce art, Da Vinci, Picasso, baseball cards, collectibles, trophy assets. But don't buy things they can make more of. Buy something you think a wealthy person will value in 10 years. If you think they're going to want to buy that from you, it's going to hold its value. Yeah, your real estate, if it's in Palm Beach, it went up by 30% because that's rare. If it's in the Hamptons, it went up by 50% because that's even rarer. So buy the most rare thing you can that's most difficult to devalue and it's hardest to manufacture more of. Buy Bitcoin because it's the dominant crypto asset network in the world. Bitcoin is an engineered monetary energy system. It's the first It's the first well-engineered monetary system that we build. We find a way to do something millions of times faster, smarter, stronger than before, and that drives forward the human race. You know, humans are divine when they engineer a better habitat for themselves and those that they love. The human that bridges the chasm. The magic in Bitcoin is to be able to pay for coffee with your phone. But, and it's a tragic error. That was not the magic of Bitcoin then, and it isn't now. The magic of Bitcoin is being able to catapult energy 100 years in the future and not lose the energy. And then the other magics are the magics that come from wrapping the Bitcoin with software to make it smarter, faster, and stronger. That's the magic. The ability to do a minor transaction, it's trivially inconsequential. You know, the one time in your life when you need to flee Iraq or Syria as a refugee, and that's when you need to do your on-chain transaction. Well, then you use Bitcoin and you can wait 30 minutes. You'll probably be okay. Company with Bitcoin as an operating system, the logical thing to do is you just sweep your fiat into your treasury, convert your treasury into Bitcoin, let it sit there, and then if a vendor wants to get paid in Bitcoin, I pay them in dollars, they buy Bitcoin. Smart enough person, you want to buy Bitcoin with it? Here's the money. Buy Bitcoin with it. Have at it, right? And I think the history of science is all about paradigm shifts and how when you introduce a new material or a new way of seeing the world or a new technology, it upends the status quo. It's generally being rejected for a long period of time until it's accepted. You feed it money. You know, the basic that you take from a lot of Taleb's books is don't run from pain. right? Pain is information. It's a stressor, just like anything else. And so, if you want a robust system, you need to embrace volatility, embrace pain, and react to it, and trend toward an equilibrium, and not run from it. Looking out over the last decade, the return on the S&P is 11.6% for 10 years running as of today. The return on NASDAQ 17%. The return on Bitcoin is 200% annually. The return on gold is less than 2%, and the return on long bonds like TLT is 4.2%. So my first principle is the cost of capital surrogate. The closest one is really the return of the S&P, which is 11.6%. It turns out that another version of the cost of capital is the rate at which the M2 money supply expands, which is pretty close to that, maybe 11% over that time. If I'm going to invest, my first issue is, can you beat the cost of capital 11.6%? Okay, because I could basically get 11.6% by buying SPY in the next 30 seconds. I think that if your returns are less than the S&P 500 index, you're destroying wealth. You're diluting your wealth. Everything you invest in that can't return the S&P 500 is a wealth dilution. And I think if your returns are less than Bitcoin, you're diluting your opportunity. You could have got 200% per year before tax, tax deferred for a decade in Bitcoin. Bonds are going to be a disaster because the cost of capital is now 39%. And the M2 money supply is 24%, 25%. The single best screaming home run right now is to buy as much Bitcoin as you have risk tolerance if you want to get an outsized return. So you got to get better than 25% if you're going to avoid being debased by the currency expansion. And my answer is I wouldn't bother with equity because for the most part, show me if the money supply is expanding at 25%, show me companies that are going to grow their cash flows 25% a year for the next 8 years. Right, the money supply is expanding at 6.5% or 6%, and the S&P is doing 8.5% for a decade. If you'd asked me that question, I would have said, okay, well, find some money manager that's got a specialty that can beat 8%. And big tech, that's an example. Big tech was beating the S&P. Apple, Amazon, Facebook, Google, that all made sense. But I think if you ask me that question now, today, thinking from first principles, I have to say the Federal Reserve and the EU Central Bank have tripled the cost of capital. And that's made your investment decision much easier. What they've done is they put 95% of every company underwater. Most companies can't grow their cash flows 25% a year. Literally impossible to do without taking on insane risk. And so why is Tesla working? Because people are looking for hyper growth. Think is not going to be, that's going to grow more than 25%. It's going to change the world. And if I don't like that, I go buy GameStop. And otherwise, what are you going to buy? Big tech? You can buy big tech, but they're all tech monopolies. Will Facebook, Apple, Amazon, and Google going to be able to, can they raise their prices 25% a year for every year for the next 8 years without regulator doing something about that? Maybe, that's your bet. Otherwise, the fundamental, most important question every investor has today is you take a spreadsheet and you write the years 2021, 22, 23, 24, 25, 26, 27, 28, 29 on it. And then you put in the percentage increase in the money supply that you expect. But if you put in a number 15, 15, 15, 15, 15, you can't buy bonds, you can't buy real estate, you can't buy 95% of the stocks. And if you put in a number 20, 20, 20, if you think that the currency is going to weaken by 20%, all you can do is buy scarce assets. Scarce art, Bitcoin, scarce art, Bitcoin, something which is not correlated to fiat cash flows, because everything else has been debased to the point that a million pages of information and strategy are all irrelevant, the models are all irrelevant. Everything you've learned in 30 years is all irrelevant. What are you going to buy in Venezuela or Zimbabwe if the currency collapses? It's going to work. And the answer is nothing. If you're in Argentina and the peso slides from 3 pesos to the dollar to 150 pesos to the dollar, which is what happened in the last 10 years, there is no investment strategy, no money manager in Argentina, no portfolio of stocks, bonds, equity, derivatives, real estate, nothing which is going to work other than this one thing. You convert your pesos into dollars, you forward finance all your cash flows, you finance all your fixed assets, you issue as much equity as you can in pesos, you issue as much debt unsecured in pesos, convert it all to dollars, put it into a bank outside the control of the Argentine government so that they can't convert it back into pesos and debase it. And that's the only strategy. And what I've just described in a nutshell is the strategy of buying Bitcoin. Right? Bitcoin's a bank in cyberspace. It's a hard asset. I take my money, I convert it to Bitcoin, I put it in a bank in cyberspace, and then I'm indifferent to how much currency gets printed by the Federal Reserve. And I've isolated my risk in that way. And that's the only strategy. Only strategy is the strategy of buying Bitcoin. Only strategy. Bitcoin ultimately is a stabilizing force for good. Track the inflation rate of assets like shares of stock or bonds. The inflation rate of the S&P is 39%. So people tell themselves, oh, that's not inflation, that's return. This year, you had hyperinflation in assets. You had no inflation in consumer goods. rich people tell themselves, I'm a genius, I bought assets that went up 39%. and those consumer goods didn't. Do you want to live in your parents' basement, watch Netflix, and order Domino's pizza the rest of your life? If so, the CPI is relevant to you. Or would you like to be wealthy or stay wealthy? If you wish to, if you wish to be wealthy or stay wealthy, then the relevant inflation rate is the asset inflation rate. If you wish to be wealthy or stay wealthy, then the relevant inflation rate is the asset inflation rate. Asset inflation rate is either the broad money supply, M2, which expanded 25% this year, or it's the S&P index. I mean, people said, oh, well, we printed money and there's no inflation. Well, there is. There was instant inflation within minutes in the assets. When you print $1 trillion, the inflation flow, the money flows into the assets and the price of bonds goes up, interest rates go down. That's hyperinflation. That's hyperinflation. What do people want? Do they want a job or do they want to never have to work again? If what you want is Social Security and you want to be able to retire early at age 40 and paint and live with your family and enjoy your life, you don't want cheap pizza and you don't want free streaming YouTube and Netflix. That's patronizing. I don't want to work till I'm 80 and have cheap YouTube. What I want is to work till I'm 40, buy a bond, and stop working. And so the pernicious issue is that the inflation rate of assets it was 8% a year from 2010 to 2020. Was 35% from March of 2020 to March of 2021. And if you're 21 years old and you've got a job earning cash, you just saw your assets inflate by 25 or 30%. That's the risk of inflation. So once you understand that, then you realize if you wish to preserve your wealth or to create wealth, the number that matters is the cost of capital, i.e. the asset inflation rate, which is equal to the S&P 500 index return or the M2 money supply, roughly speaking. And if you're not actually able to keep up, stay ahead of that, you're getting poorer. So if you're a laborer, if you have a job and your salary didn't go up by 25% in the last 12 months, you got weaker. Right? The government doesn't want to use 25% as the inflation rate because they don't want to give every federal employee a 25% raise. So they'll say, well, it's only 1%, there's no inflation yet. But then again, if every house in America on average, according to Case-Shiller index, went up by 11% this year, how is that 1%? All of our research shows us we can't tell people what to think, but we can tell them what to think about. And so if I just repeat CPI, CPI, there's no inflation, there's no CPI, CPI is inflation, there's no inflation, CPI, there's no inflation, we're waiting for CPI. If I keep repeating that, you'll agree with me. But meanwhile, the Fed prints $1 trillion, the stock market spikes, and people don't say, oh my God, assets have inflated, there's hyperinflation in assets. What they say is, oh, we're brilliant, the stock market's going up, isn't that great? Well, it's not great for people with cash. By the way, here's the problem. It's not great for any company that's valued based on fiat cash flows. I.e., every value stock, if you have a stock valued based on future cash flows, and if the discount rate is equal to the M2 money supply, and if it goes to 15% a year, you have to discount the cash flows 15% a year. And so what you realize is if you're printing money, all of those value stocks can't possibly have, they can't hold value. And so you're destroying the wealth. In the equity market over the long term while you're goosing it in the near term. And ultimately, you're going to create this massive stampede to a store of value that is not real estate, that is not bonds, that is not cash, that is not value stocks, that is going to be what? GameStop, super high-tech, high-flyer, speculative stocks, the SPACs, you know, and then that drives people out of the system, and so you have to then look at either gold or Bitcoin. And you know, the answer is Bitcoin, not gold. The answer is Bitcoin, not gold. And all of that's being driven by monetary policy.
Have you ever thought that it will end up like this? Feeling of being alone, it breaks you. Every moment, every second, think only about you, just you.
Right now, I mean, the reason that the money managers are wrong to put 2% of their portfolio in Bitcoin is because they're investing 98% of their portfolio in wealth-destroying fiat derivatives. Right? It's like, you're back in Argentina. I'm telling you that the peso is going to devalue by a factor of 100 against the dollar. So the dollar, you know, look at the blue dollar rate against the peso. It went from 1 to 1 till it bought 4 pesos, and then 8, and then 16, and then 30. When the dollar buys 30 pesos, you're going to sell half of your dollars to buy back into the peso. And the fundamental thing you're missing is, if you're owning an investment which is derived based upon existing cash or the expectation of future cash flows, and if the currency is losing 20% or 15% of its economic power every year, you're just selling the winner to buy the loser. You're putting increasing amounts of your portfolio into something going to zero.
I hate myself for losing you.
And it's hopeless, right? I mean, it literally is hopeless. I own the domain name hope.com, H-O-P-E. I bought it about 20 years ago. I waited for something to do with it. something, Bitcoin. Bitcoin is hope. If you go to hope.com, you'll see all of our materials, all of our research, all of my videos on Bitcoin. Those millennials that are buying Bitcoin are buying hope. Bitcoin is hope. And when they're buying Tesla, they're buying hope.